Welcome to The Big Picture, the paradigm show where we talk about micro market structure as well as macro markets. Today, I have with me, obviously, the man, the myth, the legend, macro man, Randy Savage, David Brickell. Thanks for being here, and thanks for being consistent. Our third co-host is out again. Joe is out, but filling in for him today is Steve. So, Steve, give us an intro about yourself.
Yeah, hi. My name's Steve Weingroff, institutional coverage team, Paradigm. So covering institutional clients, kind of being behind the screens and, just watching markets and helping with liquidity, sourcing axes, these sorts of things. Paradigm since March.
And Steve, give us a fun fact about yourself. I know I'm putting you on the spot, but I want to hear it.
I'm a huge golfer. Not a lot of golfers in crypto, but if anyone wants to tee them up, let's get out there.
How do you feel about the whole like PJ versus Liv thing?
So, from a capitalist perspective, I think it's really cool and interesting, right? Like it's been one way forever. The tour's way or the highway, right? And now you sort of have this disruption from the Live Tour just coming in and buying the top players and like getting them to play in their tournaments. From a fan's perspective, it's pretty rough. Like I watch significantly less golf, right? Like it's basically, because you have the same PGA Tour tournaments, but like half of the field, which is, half of like the top players, let's say, aren't there. So now, it's like, who really cares?
Yeah.
And then the Live Tour events are kind of small and like they're team events, and I don't even know where you watch them. So I'm not really watching that either. So it's good and bad, I would say.
Yeah.
Probably good long term.
I don't know how anybody watches golf, to be honest with you. I like playing golf, but like I don't know how you can watch golf. But no offense, man. It's just tough.
I'd much rather play. Yeah. Well, I mean, watching, it has to be, Tiger's got to be on.
Yeah, exactly. Okay,
Steve, I'm so glad you went with golf as the fun fact. I was going to remind you, it's a family show.
All right, we'll cut that there before this digresses into anything else. All right, so we have a few things going on. First, we were supposed to be on with QCP today, but markets are absolutely tanking right now. So they're going to push. We're going to do another one with them on Friday. So this kind of threw us off, but I figured we'd talk about like some of the stuff that we had planned to talk about anyway. So let's just jump into it. Just to set the stage right now, we have rallied like crazy. And today we've, started to nuke. Just, typical slow Wednesday for crypto. Steve, can you walk us through like what you've seen on flows and vols and that type of thing? I know you have some slides prepared.
Absolutely. Let me share my screen here. Yeah. So sort of set the table for recent flows in the market, to kind of zoom out a bit, right? We had the FTX collapse in November, and then, which was a really high volume event, like a lot of volatility, obviously just like a lot of things going on. Then after that, volumes really came down, and people sort of stepped away from the market, whether it's altogether or just for a break. And then this kind of parlayed into Christmas and like New Year's and the end of the year. And really no one was doing anything, and realized vols hitting like these new lows, super like crypto vol, super boring. No natural interest or takers. Buy side was really quiet. And we even ran an analysis to see like how much like interdealer flows had increased. And it was significant. I mean, it was like, I think almost half the flows were just market maker versus market maker trading. And so, kind of into the new year, we've seen like a really solid rally on spot across BTC and ETH. And I think the most refreshing thing, right, is just the return of natural interests along, with this rally. It's really brought people back to the table. And so I know last week we spoke about all of the large topside flows and buying. And this week it's sort of been a continuation of that. Up here, I have some like FOMO. There's definitely some FOMO buying out in the market, and people saying, "All right, we're really going to giga rally here, and like it's time to get long." So you could see some outright call buying in BTC, as well as I thought these risk reversals were pretty interesting. Sell, put, buy, call. They noted that they think that it's just a delta trade, right? Like we're just going to really continue to pop. So people definitely have fear of missing out. See a pretty big ETH print there. And I think this week the call buying has definitely continued, but we have seen some downside flows as well. Someone bought a ton of puts last week around the money, pre-CPI, and then we rallied. And so we saw them close some of these out last night and early this morning in the US, and start to roll this downside protection, these outright puts, to next month.
So is that downside protection, Steve? So long the underlying and just hedging the downside. Is that the right way to think of it?
Yep. Yeah, it's likely that they're just hedging their like if they have VC investments, right, or like direct crypto investments, it's just kind of nuke protection. Yeah. So from realized vol, right? Like you can kind of see in the bulk of this chart is super depressed. It was basically a floor down here, trading below 20, which record lows again, super low volumes, just nothing happening there. And then as we kind of rallied, things started to get really interesting, and people started chasing topside, and it is brought vol back to the market. And Justin, as you were saying earlier, like this morning, we were rallying, and now we're absolutely puking it back. I'm sure that vol will kind of continue to inch higher, and I anticipate things to stay interesting here for a bit.
At least honestly, even though it's volatile and we're, like my portfolio is going down right now, at least it's a bit of a dopamine hit, right? At least it's not just going sideways. That's like the boringest time, and it's probably great for for some. It's good for vol traders, right? If you're a good vol trader, you're making money right now. So
it's good. It's good for market makers, right? Like it's good for everyone. And again, it's like, okay, there's stuff going on. There's things to do. This brings back the takers, which ultimately is the fresh blood that this market needed post FTX.
That's right.
Yeah, I think that's been an interesting thing from my side in terms of like the flows that I've been seeing is a much kind of better mix of kind of clients getting involved. Say that's a nice mix of taker flow, directional guys, as well as just sort of those sort of playing vol. It's definitely interest has returned to the start. Yeah, price will do that, right? But we've also got narratives as well, which is really, really cool to see. Awesome.
Cool. Let's move on to the next slide.
So I guess I can sort of lead off a little bit with sort of what we're thinking around the macro and sort of what's been going on with that. Just to jump in on the macro, obviously we kind of had quite a timely recording of the big picture last week, and we talked about the the short gamma flows and the potential for the pump. We obviously got that pump over the weekend, and then you guys in the US were taking holiday. I don't know why you take holiday so early in the year, but there you go. But so obviously we had the weekend pump, and what's quite interesting is everyone was talking about it's a short squeeze and it's going to get smashed, and I think everyone came into this week thinking spot was going to get smashed back down. We're obviously getting hit now with this DOJ story, but from the macro side, so the actual sort of macro data continues to sort of play out. That this whole peak inflation, peak rates narrative, peak Fed, which we've been talking about, is going to sort of spark sort of a leg higher in risk, and talking about the underpositioning. A few things are really starting to take shape. So actually, Steve, you go to the chart with looking at 2-year rates. So this chart's been on my radar for quite a while because I keep saying that we can ignore that the Fed are going to keep talking about keep wanting to stay on that hawkish note because they don't want the market to front run them. And as they transition from this hike cycle to the pause, they want to control the narrative around that. So they keep coming out sounding hawkish and Certainly politically, I think they feel the need to keep sounding the sort of hawkish alarm on inflation. And also everyone's still having these sort of Volcker flashback nightmares. So they don't want the market kind of easing too early. But the voice I say we need to listen to is that of the bond market, and particularly at the moment, those are 2-year yields. So this is quite a good read in terms of where the bond market, which is your best economist, is looking at things and where they think rates are going. And just been kind of keeping an eye on some interesting levels that we look to be breaking down. So this sort of break below sort of 410, 412, 410 has been quite a big support level. I noted last week that if we actually the sort of downside to or taking some of the shine off the sort of positive risk moves and crypto moves was the actual, we saw 2-year yields start to move higher on Friday, getting caught up in the whole sort of euphoric sort of risk move. That's now started to return. I was concerned about if we'd gone above 430. We've now broken down sort of below 412 today. So again, I think this kind of continues to play in this sort of peak rates narrative, which is going to ultimately support crypto. The other thing, so we had the pump over the weekend. Everyone was talking about, do we fade it? And I still think markets are trading this sort of 2022 playbook, and the game's changed, right? The game has changed, and we are in, completely different sort of macro environment as we come into the pause. And so we had obviously the US out on holiday on Monday, but the big news that overnight I think kind of was keeping everyone a little bit sidelined was the Bank of Japan. And all the conversations I was having with sort of macro guys, certainly from the sort of TradFi world, there was a growing expectation that the BOJ were either going to widen the band for yield curve control or completely lose it. That was kind of a fear. Now, we've spoken before about the Bank of Japan. If they'd let the yield curve control go, you would have seen Japanese government bonds get absolutely smashed, treasuries get smashed, and risk would have been a shit show waking up this morning. As it was, they didn't do that. They kept things as they were. And I kind of think that's a big risk event off the books. So we was kind of looking at, we're going to start to rally. I think that's seen bonds rally. So bonds is kind of ticking the box in terms of this long duration move that we've been sort of championing and thinking that we're going to see. And crypto looks set to take off. And then we've just kind of been hit on these DOJ headlines.
Just to interject, I was checking Twitter. The DOJ just announced that they are because it's happening right now. They're live streaming right now, but they just announced they're taking enforcement action against the Russian exchange Bitslato, which I've never heard of. So,
oh man, we're going to rip on that because everyone was saying it's finance.
Also, I don't know I don't think it's over yet. The announcement isn't over yet, but yeah, that's like a Russian exchange no one's ever heard of. So just like peak FUD going around on Twitter. One of the best traders I know trades with an absolutely massive stack, and he's just anonymous on Twitter. Just said he's buying ETH at 1,500 in bulk. So we'll see how that plays out over the next week.
Mine. Yeah, no, definitely. I mean, look, we looked like we were set to take off. The rate story for me is super important. We've seen this breakdown on the 2-year, which kind of sets up for the liftoff. The other thing as well is, say, markets are trading this 2022 playbook, and it's the wrong playbook, and 2023 is not 2022. And markets under position for the top side. And the interesting chart, and this isn't crypto, but Bank of America do a survey, investor survey, and this just come out, and you can see. This chart here is looking at from funds in terms of their being underweight US equities, and you can see right now they're massively underweight US equities. Sort of some of the lowest levels we've seen lowest levels since financial crisis in terms of sort of running underweights. So this goes to show you just how bearish this market is. And we were looking at open interest earlier. Obviously, we've spoken before about in crypto, we had that large sort of open interest. I think about basically 50% of open interest rolled off in DEC. We started to see that slowly build up over the past week as sort of people kind of been drawn back into the market. But I think the takeaway from this is the market is massively under position for the top side in risk generally, and certainly in crypto. I think as we break levels higher, people are going to be sort of drawn into sort of chasing performance already, because a lot of people would have been sidelined. Let's see how things go in the first couple of weeks. And the macro has kind of turned as quickly to start this year as kind of things turned, if you remember last year. And last year, I kind of felt that crypto led the kind of macro shift in terms of this Fed hawkishness. And I feel crypto's leading again in terms of this sort of change in macros as we sort of move towards the Fed pause. So I think the market's massively underpositioned. I think we're going to continue to see open interest sort of grow, and we're going to sort of break some levels on the top side. The other thing that's interesting to me is actually, right, we can't have this rally, and we can't get back into a proper bull market without retail coming back in. And I'm not one for these shit coins to sort of pump up, but it was nice to see like of Doge and Shibu, and we had Bonk and so the other week. It's a real sign that the retail interest is coming back to life, and I think that's really going to complement what we're seeing on the institutional side.
Yeah, exactly. I hope you're right. For my portfolio's sake, for my family's sake, sir.
Yeah, let's just hope the DOJ don't ruin the party right now, because the party was just getting going. Steve had just got his dancing shoes on.
I'm still trying to keep up. But
you got your haircut for this.
I got my haircut for this. Yeah.
Yeah, David, you're looking fresh, my man. Looking fresh. All right, so. I kind of want to wrap this one up as quickly as we can, but or keep it like short and succinct. Any last thoughts or anything else you guys want to talk about?
So I think I think we covered most of it. One other note is, to kind of go off the flows. We've seen in the beginning of this year BTC options dominating ETH just in terms of interest, as Bitcoin's rallied more than ETH. And so you can kind of see it here in this chart of Deribit open interest. On the left here is BTC versus ETH, and it's pretty clear that it's just tremendous buying ETH options, and with the vast majority of these being calls. So really, just highlighting like how strong the top side bid has been.
Yeah.
Kind of to start the year here.
Can you tell, excuse my ignorance, but can you tell like where most of these are being bought, or do you have a chart for that?
Yeah.
Like what tenors?
So this chart shows open interest change for the last 2 weeks, so roughly year to date. And you can see that it's in
March.
It's in these sort of 10, 15 to like 40 delta calls, right? Just, prime top side positioning, going out really to about March. So people really, playing for this rally to continue. Bit of downside buying, just that one outright 17K put there. But yeah, so much interest in calls.
That's what I wanted to know. So I love looking at, I don't know if I said this, but this is a material scientist chart. But I love watching these charts because you can watch different wallet sizes and when they start dumping or when they start buying. This was interesting to watch. Every single wallet size just start dumping over the last like 4 hours, basically. And then watching the market, move in tandem with that. But yeah, I thought that was interesting. And that was the last thing I wanted to say. I think we just wrap this one up here since it's the three of us. We kind of covered all the topics and we reconvene in a couple days.